Hey, so welcome to the first episode of the weekly watch list, where we're going to give you every single week our views and thoughts on the markets, but we're going to give you them at the end of the week because we're not about to give financial advice for people to then take trades and for us to take the blame on you winning or losing money. So we're going to be recording this every single Monday and we're going to be uploading it every single Friday. But before we get into the very first episode, hit the subscribe button, hit the like button and smash the notification bell so you get notifications for videos just like this. We're going to show you the good, the bad and the ugly from every single one of the trades that we take and we plan to take throughout the whole entire week. So we're going to dive into the charts right now. By this point you'll be able to see my screen and you'll be able to see everything that's happening on TradingView. Right now, as we are recording this video, this trade has just hit my stop loss and I'm now out at 1%, minus 1%. So I'm going to break this down, my thought process going into it and why I chose to get a sell trade. So basically, as you can see here, we have an ascending channel that bit by bit is starting to lose some momentum. We've been in an uptrend for quite a while now, since the 2nd of November, and we just seem to be climbing and climbing and climbing. Now, one another confluence was that we did expect the dollar to get a little bit stronger, to take a pop to the upside, which in theory would hopefully drive GBPUSD further down, but as you can see that has not been the case. We've actually just been stopped out literally 5 minutes before starting this video. So what we're going to break down is, if we change this to candlesticks, because I know most of you deal with candles, you'll be able to see a little bit of a clearer picture. But again, we were looking for a sell trade at this time because we had a nice push up, a rejection from the top, and we'd had a nice close showing that sellers were starting to take some control back in the market after, you know, a sort of steady gradual push up, but nonetheless not too convincing. So then what's happened is, when we went down on the 4 hour, if we just mark this on the chart so we know where we are, if we mark this here, if you go down to the 4 hour, you'll be able to see we started to get a nice rejection engulfing candle here. We had closed below the low of the previous 4 hours, and then we entered a trade. We had anticipated that we would have hit the bottom of this structure and then pushed on through, but obviously that's not been the case, and we've actually started to rally higher. We thought placing our stop loss nicely outside the pattern keep us out of harm's way, but it's continued to push higher. We will be looking at possibly entering a sell trade in the future. We're just going to have to wait and see what happens, but again, it's nice to start off with a losing trade, because not every trade of ours is a winner, not every trade of anybody's trades is a winner, and it's great to be transparent and show you exactly what does go wrong in trading. So that's something that we're going to put back on our watch list. So NZD/USD, we will be looking to convert on that later on in the future. Now, we've just entered a trade on AUD/US dollar, and as you can see, not too convincing right now, but we'll go through the thought process on that. As you can see, again, we're just sort of ascending, not really getting too much buying power in the market right now, and we are approaching this very key level at 0.74154, as you can see here. Now, just the whole nature of how this is approaching the level, it's moving up. We've had a nice massive bullish push up, but it's just moving up very slowly. The higher highs and higher lows aren't really too convincing. The structure isn't really there. So if we pop down to the 4 hour, let's see what else we can see. Again, the angle, the trajectory of this trend is not too convincing. It doesn't really suggest much strength. Now, what led us to get into that trade was, if we go back up to the daily, was this candle here. We had a nice push up at the start of the day, and then what looked like we were going to be forming a shooting star candle. And if we pop down to the 1 hour, and we can see where we got in. We had got in nicely once we had seen this massive in comparison to the other candles, this big bearish candle here, and then we've started to push down even lower. We thought, okay, we're going to get a lower low, lower high, and then a continued push down, but we're sort of in limbo right now. We're in no man's land. Things aren't really moving, and right now, as you can see, we've had a massive wick up, and this hour looks to be closing in 8 minutes. A massive shooting star candle, which could be in our favour, but again, you've got to take in consideration these wicks down the bottom here. Are we actually going to continue to the downside or not? Who knows? We just have to play it by ear. We put our stop loss nicely behind the highs of these candles here, and we do anticipate at least down to the bottom of the structure, and then a break all the way down to possibly these lows here, 0.72655. But at the time you see this, this trade will have already been said and done. Hopefully you'll have missed your entry, so we're not giving financial advice here. But the whole point of these videos is so you can understand our thought processes going into the trades, coming out of the trades, our winners and our losers, so then you can take that knowledge and apply it to how you attack the markets. So again, that's something that we're just going to have to watch and play out. USD, that's off the table right now. EURAUD was a good trade that we've got in, and it seems to be doing very well right now, as you can see. Now let's zoom back out and you'll see why we've took this trade here. Now all the way back in the 9th of June, we've had what was the very first touch of this ever so slowly ascending trend line. Then we came back down on the 21st of July, had another touch, 3rd of September, 17th of September, and then we've had multiple touches driving into it, just failing to break it. 12th of November, 16th, 24th, and then as you can see here, this is the key part of where we got in these trades, was there's bullish momentum here. Yes, we're getting a couple of wicks to the upside, but each day has been closing bullish, bullish and bullish. And just think of, especially at the bottom of the charts, think of like an engine starting up. It just seems to not go anywhere, and then it just gets bigger and bigger. So this little indication here, this little candle, and then this one straight after it was enough for us to tell, right, okay, the engines are finally starting to pick up. And then we entered the buy trade right here, and as you can see, we're fully taken off. We do anticipate maybe a break and retest of these highs here at 1.63688, and then a continued move to the upside. We could potentially see the very tops of this wick here at 168.210. If we do see the tops of that over the next few weeks, maybe even a couple months, we're looking at a 4.5 to 1 risk to reward, which is absolutely excellent. There may even be options to scale in later on, maybe another 0.5% or whatever. But again, we're just going to have to wait and play it by ear and see how this trade plays out. But again, it was nothing more than just good knowledge of having the several touches and just knowing price action, how it behaves, and just looking at this behaviour here after the third key touch anyway, with a gaps in time. Because as you can see here, they've got 1, 2, 3, 4 really good touches. We've got more than that if you count all the other ones in between, but the ones that have gaps in them, 1, 2, 3, 4. So this has really tried very hard to push down, but each time it has tried to push down, we've still continued to move higher. So that would suggest that everybody else is going to be paying attention to this, and we are going to be looking to load up in a buying situation, and that's exactly what's happened. Then from there on out, it's just figuring out, okay, what does the price action look like, especially on the daily, because we want to be trading intraday. We want to be making sure that if we are catching trends, that it's the trend that is being followed on the daily, whether it be bearish or bullish. In this case it's bullish, and then all we done was we made sure our stop loss was outside the pattern, gave it plenty of room, wasn't too greedy with our stop loss setting, and now we just let the trade run. Now we're just going to look for structure changes so we could then continue the trend after a pullback and then move our stop loss, trail our stop loss up, so we take risk off the table and then keep adding little bits of profit, so if we do eventually have the trade turn against us, that we bank profit. Right now trade's currently sitting at zero risk, so we've got nothing on the table. Now that we've broken the tops of this high, technically you could call this you know, very slanted ascending triangle potentially. But now that we've broken outside of this and we've broken this high, we do not expect, or we shouldn't expect, price action to come back below this level and touch our entry point. If it does, then really we don't want to be back in that trade, and we're going to have to look to recalibrate and make sure that it is a good option for us moving forward. So that was the thought process going into that trade, and that's exactly what we're going to be doing moving forward. We're just going to be trailing our stop loss, making sure that we've got no risk on the table, and that when there's an option to see fit, keep moving our stop loss up so we bank profits and we are not missing out on any money. Moving on to EURJPY, that's took a funny turn just ever in the past 10-15 minutes. A massive bullish move. As you can see, we're looking like a similar setup for that we had another ascending channel and a nice area of resistance here on the daily, but it's just smashed right through it. But it is part of a bigger pattern. As you can see here, we are looking to, if we go back down, back up to the monthly, sorry, you can see here we do have a much larger move at play. So as you can see, we are coming to the top of the trend line of this almost symmetrical triangle, so a breakout could be on the cards, and once there is a breakout we could see potentially these highs getting taken out and then a move up to maybe even these highs or these highs in the coming months, or we could get a break to the downside. But right now it's looking very bullish, especially in the past couple of hours, so we're just going to again wait and see how that price reacts. It is on our watch list. There's nothing really to shout about right now, but what we are going to be doing is watching it very carefully to see if we can get an entry, maybe a long-term swing trade, or maybe even a couple of intraday setups. But again, that will all come down to how the price action is behaving and the opportunities that it gives us. So EURUSD, again, very interesting. With the dollar really being quite weak right now, we could potentially see a buy setup. We've just smashed through this area of resistance here, the previous highs from the 1st of September at 1.20375, and we could potentially get a break and retest of that all the way up to the next high, which would be quite a substantial one. We've got a lot of room up here, so we could go all the way back up to 1.2400, and that is quite a large move, and it's one to definitely keep an eye on. So again, we're just going to have to wait and see what the price action tells us, what the market's telling us, and keep checking in with the dollar index, because the dollar index is going to help us drive this pair up or down depending on what occurs in the charts. There's not really too much else we're looking at. GBPUSD, we did enter a sell trade on this, as you can see. At the time we have had, you know, a pennant pattern, an ascending pennant pattern, and we had respected this level very well. As you can see, we've whipped above previously on the 1st of September, and then coming into this level on the 24th of November, 25th, 26th, we've just tried to break above it but really struggled. And then today it looks like we've had another push up, but we might actually close. We've got another 4-5 hours left. If we get another rejection here, that's going to be a really good sign that our trade was the right one to make, and it's going to drive price action down, and hopefully we've got our target set at 1.28546. We have placed it just above this high of this wick here, just out of harm's way, so give it plenty of breathing room. 1% risk on the table, and we are looking to get a 3.1 risk to reward on that trade. So we've got a couple other ones. EURJPY, not really too interested right now, it's stuck on the watch list anyway. It'll just be interesting to see what happens with this bit of price action here, whether we break to the upside or we break to the downside. It doesn't matter which way it breaks, we're going to be catching the ride anyway. And once we do, we're going to make sure that we get the right setup. We're not just going to rush into it just because it's broken out of a pattern, because that's a fast way to lose money. We're going to analyse the situation, make sure that we're not being greedy with our stop losses, putting it in good places that are out of harm's way, giving the trade plenty of room to breathe, and then hopefully once that's in profit, taking the risk off the table and just following our stops. The market's really giving out on some pairs swing trades and other pairs more intraday, more shorter trades, so we're being a bit flexible with our strategy right now. Normally we're a tiny bit longer term, and we do like to look for bigger risk to reward ratios, but if the market's not playing ball in the terms of swing trades, we will look for shorter intraday setups just to keep active. But of course we're not just keeping active just to keep active, we're keeping active because there are still opportunities to make money, and we don't want to be masters of just one strategy. If you are confident in your risk management, if you're confident in your analysing of the markets, and you're in complete control of your emotions, absolutely switch it between different strategies depending on what type of market cycles. If you're in you know, an uptrend or a pullback, a downtrend or a pullback, it really doesn't matter. If you see good quality setups in the lower time frames that you're comfortable taking, and you're happy that you know that you might get caught out if you are in a pullback phase and you're hoping to trade those types of counter trends, by all means take them, but make sure that you calculate your risk accordingly. Make sure you only risk 1%, and make sure you're happy that you know you're trading counter trend and things could go wrong for you. GBPUSD, we just done that, and then I'm not really seeing too much on USDCAD. We did take a trade on USDCAD, it was a really nice trade. Where are you? We took this trade here, we literally took this trade right here. We had traded it, put our stop losses behind these highs, and then we had taken it all the way down to here at 1.29290, and as you can see, if we zoom out, it was the very bottom of this wick here. But for that day, I mean, full transparency, it meant absolutely nothing because we lost another 2 trades, so we were down 1% for that day. I think that was yesterday. So again, it was a really nice trade, a really nice setup. It's just to give you guys the idea, the thought process behind it. As you can see, we had a really nice area of support which had been broken and been respected very well as resistance. Look how many times it's been whipped away and not been able to break. And then once you get this candle here, this is when we took the trade. Although it closed back up, it still broke the lows of these candles here and the medium, and then we just rallied all the way down to take profit quite fast. Didn't take long at all, but again we lost a couple of trades at the back of that, so we were still down for 1% for that day. Full transparency there. USD Swiss, that again seems to be doing crazy things. It's all over the place right now, but again it is at an interesting point. It's at an interesting point. Let me just have a look. As you can see here, we've got a really nice level that it seems to be respecting pretty well. So we seem to be breaking this right now. So what I would be looking for is how it reacts to this low here, because it's the most recent low. Again, I would just keep an eye on the dollar index, and as you can see here, this level here at 0.8555, we'll zoom out and you can see that it is the lows of the 2nd of July 2014, which could be the next place this is headed if it does clear this bottom trend line. Again, I don't think we're going to be going down to this area anytime soon at 0.8300. That's still a long time away, but the most obvious place now, if it does close and respect below this low here, we will see a move down to 0.89828, 0.89824, so have a look out for that. But again, it's not really looking too clean, it's not really caught my eye. There's something to look at in the future, but not too much right now. USDJPY, again, it's not really doing much. We're sort of just in no man's land, going from side to side. We're failing to really break these previous highs. We've failed to break these previous lows. We're just no real clear market structure, but we are coming to an interesting trend line that we are seeing further out on the daily that started on the 30th of June 2020, and we just seem to keep pushing down. But the fact that we've created a new low and then a new high and then failed to break a new low tells us we're currently in bullish structure, but then we failed to make a new high again, so we're in bearish structure. Then we failed to make a new low, so we're in bullish structure, and now we're failing to make a new high. So there is something going to happen very soon. We're going to get a breakout either direction, but we just have to make sure that we are prepared and know outcomes for both situations. So again, just be wary that if you are going to looking to take a buy position in the near future, that you do have this quite strong, well respected over time trend line in a bearish fashion. So if you're looking to trade it, don't be looking to trade it too high up, because you are going to run into this resistance, and I do feel it's going to have a reaction on the price action. Maybe once you get a break and maybe a retest of say this support zone here, maybe then you could look to be taking it up to say maybe a second and a third or maybe even a fourth take profit up to this even bigger outer trend line that you could see on the monthly. But again, we have to just wait and see and wait on what the market tells us and what the market wants to do. So basically that's been our weekly catch up. You found out our losing trades, you found out our winning trades, and you found out our thoughts on what pairs we've been looking at, the main 12 pairs that we trade for this week. You will be seeing this on a Friday. This is the day that's going to get uploaded, and this is going to be the structure we're going to keep every single week. We're going to be analysing and recording the video on the Monday, and we're going to be uploading it on the Friday, because we don't want to be giving people financial advice and telling them when and when not to place trades. We just want to be giving you educational content, so you could then take our views and our strategies and our thought processes into the market, so you could then be more profitable and have a better understanding on what markets not to trade, what markets to trade, the best times to trade, the best times not to trade, and keep in check of your emotions just by having another inside scoop on what other people are trading. So this has been the first episode of the weekly watch list. Hit the likes button, hit the subscribe button, and ring the notification bell so you get every single episode. We're going to keep doing this every single week to keep you guys educated and to make sure that you're getting as much knowledge for free on the Forex markets. So this has been the weekly watch list number 1. Make sure you hit the like button, the subscribe button, ring the notification bell, because we're going to be doing videos like this every single week. We're going to make sure that we upload this on every single Friday. We're going to be recording the videos every single Monday, because we don't want to be giving out financial advice and telling people when to trade and when not to trade, but we do want to give you the thought processes and the techniques and strategies that we use to be consistently profitable in the market. So until the next one, we'll see you later.